The Nifty is down about 72 odd points.
Nifty is currently up 70 points from the day's low. It's just marginally in the red, down close to about 14 points.
Nifty 50 continues to be on the flat line, 17,500 levels.
We've got a huge market move going on, all of 5 points. So, I mean, you know, it's a pretty tepid day. Interesting kind of day, but very good day all in all. I don't think broader markets picked up that much. Advanced decline is still 1:1, but Nifty picked up beautifully.
Hello and welcome to CNBC-TV18. You're watching Markets Today, the show where we track about 6 hours of the day's trading action and 5 headlines. I'm Reema Tendulkar and these are the headlines for the day. Markets recover in last hour to end in the green. The sensex rises nearly 100 points. The Nifty gains over 50, but bank stocks decline. Rupee hits a new low as the dollar strength continues to rattle currencies across the world, but the RBI steps in to stem the decline, sparking a late recovery. The Japanese yen weakens against the dollar to levels not seen in more than 3 decades. Innocent Bank slips despite strong growth run and rising margins. AU Small Finance Bank slides despite a strong quarter on growth concerns. Canara Bank gains on the back of a good second quarter. Asian Paints misses estimates in the second quarter. Margins decline sequentially and volume growth is below expectation. The management says demand was subdued due to extended monsoons. Some relief for Vodafone Idea. Reuters say the market regulator has approved the government's proposal to convert its pending dues into equity. The government stake could rise to 33%. And here's a lineup of what we have for you in store today. It's a power-packed show. In Market Opinion, Sridhar Shivaram, Investment Director at Enam Holdings. And in Big Corporate Voices, Anil Rai Gupta, CMD Havells India, Jonathan Hunt, MD CEO Syngene International. The first up markets, a rally in Rupee rubbed off on the equities in a late rebound, which helped the Sensex and the Nifty end in the green. The Sensex gained 100 points, the Nifty climbed over 50 points, but the banking stocks were under pressure along with the mid-caps. The mid-caps staged a recovery towards the end of trade, but still ended in the red. Prashant is here with the market highlights.
Well, the market made a very strong comeback and bulk of that move came in the latter half of the day. You know, yesterday we were talking about how the rupee weakness induced weakness in the Nifty as well. And I think a little bit of reversal happened there. The rupee was very strong, 40 paisa recovery from the day's low, and the market came back pretty strongly as well. PSU banks continue their run. That index has done phenomenally well over the last 4 sessions, even as the private bank space continues to slump. Bank Nifty, as a result, because private banks have a larger weight, was lower. The other space which did well was IT services, and you'll see that in stocks. So in Nifty, names like Tech Mahindra, HCL Tech did very well. The Adani Group stocks in the Nifty, that is Adani Transmission, Adani Enterprises, beg your pardon, Adani Ports, they were higher. And then you had names like UPL and NTPC, which participated as well. Losses in IndusInd Bank, which was a bit of a surprise because numbers were good. Asian Paints was lower, and you had Apollo Hospitals, which lost as well. Broader markets, almost 1:1 in terms of advances to declines. Names like Canara Bank, Mazgaon Dock is back again on the winning streak. A lot of them, of course, reacting to earnings. Deepak Fertilizer, PNB Housing, Birla Soft, Rallis India, and a bunch more. The recent listing from last week, lost finally. It's been on a non-stop tear upwards. That is Electronics Mart. That was down about 7%. AU Bank was under pressure. Container Corporation reversed some of the gains from earlier this week. Delivery was a big loser, with big volumes as well. Policy Bazaar, another one of those recent listings. And Schaeffler, which is a well-owned auto-anch name, which came under pressure as well. I think it's back to watching global markets because that is where a bulk of this volatility today and, in the second half yesterday came from. Yields in the US need to cool off a little bit, and I think that will provide a little bit of calming effect to global markets as well. Back to you.
Thank you very much for that. Let's also get you some expert opinion on the markets. Christy Fong, Senior Investment Director at Asian Equities at Aberdeen, said India remains an attractive market. It has good long-term prospects. She also discussed her top bets for the Indian equity markets. Listen in.
India has always been an attractive market for us. We are long-term quality investors, and because of that, there are a lot of companies listed in India that tick many boxes for us. So attractive market, very good long-term prospects. Obviously not without its challenges in the past, but we've seen how companies have been tested through cycles, showing resilience. great management team. So yeah, very positive on India at the moment. India's amongst our preferred markets. Within that, we've always liked the domestic consumption story. That has not changed. We continue to like the private sector banks. Banks, has been through a difficult cycle, especially in the last 2-3 years. And you are seeing that starting to turn around. So we are constructive on banks, especially the private sector financials. Consumer names is another one that we favor, and that comes in different forms. So, it comes through in not just staples, discretionaries, but, communication services. So that's the underlying driver that we like and we see attractive in India.
Let's get to the second headline then. The Indian rupee went on a roller coaster ride today. The currency opened at a new low against the dollar, then fell rapidly in early trade. But sources say RBI intervention in late trade sparked a dramatic recovery. In fact, the rupee's recovery today was the biggest in the last 1 year. But as things stand, $1 costs just under 83 rupees. But the rupee is not alone. The strength in the US dollar is rattling currencies across the world. The Japanese yen has fallen to a 3-decade low. The Korean won, the Malaysian ringgit, and almost all the major currencies in Asia are struggling against the greenback. Lata is here with the money market action.
Well, actually, it's a huge U-turn that we have seen. Where did we start at 83, almost 83.01, fell as much as 83.30 thereabouts, 83.28 to be precise, and another 50 pice move on the other side to 82.80. Now, global backdrop hasn't changed much. It is still against emerging market currencies, and other Asian currencies are still weak. And US yields are still high, dollar is still high. What clearly is changing is the flow. Yesterday, we spoke about this one foreign bank which seemed to have had a large buy order for dollars. Now, once that ebbs, then that also takes away a bit of the pressure on the dollar. In addition, banks which knew of this order and expected RBI to come in had also taken positions, at 82.30, 82.50. All of them got hurt and nobody wanted to risk it now. The crux of the matter is it's a very illiquid market. And so even one bank or two bank buy orders can swing the market both ways. And, the Reserve Bank was there unexpectedly. The Reserve Bank has this ability to perhaps catch the market napping. Yesterday, a big order came in. They didn't want to stay in the way. They ensured that the buyer bought the dollar expensive. And today, when the wind was somewhat on their side, with not too many buy orders, they just came in and rammed it down, or so it looks, offered a considerable amount at 83.20 and took the dollar below the 83 mark. It's an illiquid market. So, the Reserve Bank picks and chooses the days that it wants to intervene with minimal expense of reserves to maximum impact.
Thank you very much, Lata, for that. Let's get to the third headline for the day, and it's all about banks. IndusInd Bank, AU Small Finance Bank, fell between 4 to 6% despite beating estimates in the second quarter. While Canara Bank gained on the back of a better-than-expected Q2, the stock ending higher by 4%. Abhishek joins us with the key highlights of the earnings.
Well, for IndusInd Bank, it has been a record quarter for many parameters. Like for 8 quarters in a row, they are seeing operating profit growth both YOY and quarter-on-quarter. Net interest margin is at 9-quarter high. The return ratios are perhaps the best in last 11 quarters. Loan growth is the best in 11 quarters in terms of YOY momentum. Slippages, they have remained under control and one of the lowest in last 8 quarters in terms of slippage ratio. And asset quality, that is gross NPA ratio, is the lowest in last 14 quarters, coming in at 2.11%. So both in terms of NII and PAT, they have beaten our poll. In the analyst conference or the analyst feedback is that, there is a concern with respect to further duration of the MD as the board has given for 3 years, and it is more likely to be lesser than that. So coming on to AU Small Finance Bank, the net interest margin has expanded by 30 basis points on a sequential basis, aided by the fact that yields have improved, and CASA ratio has also jumped, which has aided the cost of funds being under control. So AUM growth was around 38% YOY and about 4.5% sequentially. Slippages have remained under control and asset quality largely stable over there. Restructured book has declined massively to 1.7% versus 2.1% in the previous quarter. So both in terms of NI and PAT, it's a beat on our poll. However, the feedback is that, in the con call, the management has guided for loan growth to be in the region of 26 to 27% versus 38% that they have recorded right now. Canara Bank has seen a strong quarter this time with records gathering over there. Gross NPA ratio or asset quality being the best in last 7 years. The loan growth is pretty strong. They have gained market share both YOY and quarter-on-quarter. Net interest margin is at 9-quarter high of about 2.83% and operating efficiency or the cost to income ratio is the lowest in last 22 quarters. However, on the flip side, the CASA ratio is the lowest in last 7 quarters and international book that continues to outpace the growth in the domestic business for last 6 quarters in a row. In terms of P&L momentum, both the NI and PAT is a beat to our poll. However, one point to note is that the tax rate has declined substantially to 22.7% when compared to 30.7% in the previous quarter.
Thank you very much for that. Need to get into a break. As we do that, we leave you with some more market opinion that we got today.
Our view for 22 broadly had been and has been it is also right now that 22 is a tough year. As it is looking, we may actually even the first half of 23 also may be slightly tough, not because of more of India reasons. More, I think the global challenges are still there. India is looking good within the overall, emerging markets and developed markets. But does that mean that, we can escape some of the global shocks if they come? So that's how we are positioned. We are cautious, but we know that things are looking good as we enter 23, possibly for India at least. But how it shapes up, only time will tell.
In a world dealing with multiple challenges, India remains an oasis of hope. We would bet on domestic cyclicals because we remain positive on India's growth prospects relative to the rest of the world.
PSU banks, so they can be a good, maybe not a very long-term investing, but as a trade, you buy it less than one book. Like most of the banks are about 0.7, 0.8 book, and except SBI. SBI is a little premium. So leader of the pack is SBI. So I think, so that's a very large, so you like financials, and in that, not so favored is the PSU banks. So like that, there are opportunities.
Best bank in India by far has been HDFC Bank, and it's done nothing for 3 years. And even now, it's like, oh, how will they grow? How will they get deposits? I mean, with a 5-6% share of a banking sector, where the economy is still going to triple over the next decade, where your share of financial savings is going to go up. If you're going to tell me that the largest player here doesn't know what to do and how to grow, it's a bit of a kind of no-brainer.
Welcome back. You're with us on Markets Today. Let's get through the rest of the headlines that we're tracking for you. This is the fourth one. Asian Paints fell over 2% after the company missed street estimates in the second quarter. Volume growth lower than street expectations. Margins are down close to about 340 basis points. Mangalam is here with the details on the numbers. Mangalam?
Well, it was a top-down miss that came in from Asian Paints, and it comes in directly from the top line. And it so appears that the volume growth of the company this time around has been 10 to 11%, and this is lower than street expectations of around 14 to 15% Importantly, gross margins as well has declined quarter on quarter. Even after the price hikes of almost 17% that the company has taken over the last 1 year, the improvement year on year is just about 100 basis points. So that's telling you that even realizations were under a tad bit of pressure. The overall revenue is just above 8450 crores. The street was working with a number of 8900 odd crores. The EBITDA coming in at 1219 crores. The street again was working with a number a little shy of 1600 odd crores, and that means that the margins came in at 14.4%. The company's comfortable band for margins was 18 to around 21 odd percent, so it's below that as well. And the net profit as a result of which was almost 20% below street expectations. Quarter on quarter as well, there has been a decline in both the EBITDA as well as the company's profitability. And the company said there was subdued demand conditions impacted by extended monsoon. So to that extent, it will be important to see what they do in the third quarter as well, because large parts of the country did get a fair amount of rains even in the first few days of October. And secondly, we need to know how the festive season has performed and whether there will be some sort of margin improvement in the second half of this year as well or not. So those are a bunch of things that we'll be watching out for Asian Paints. But for now, it appears that the second quarter volumes are a miss and overall numbers are a miss as far as expectations are concerned too.
Mangalam, don't go anywhere because Colgate too reported numbers and the stock reacted positively, ending with gains of close to about 2%. Can you take us through the numbers?
Well, for Colgate this time around, it was an uneventful quarter. We saw a revenue of almost around 1387 crores. The street was working with a number just shy of that 1400 odd crores. The EBITDA coming in at 408 crores, a little above street expectations, but that's primarily because the company went ahead and cut its ad spends. Year-on-year ad spends were down by almost 15%, and that's where most of the savings came in, because as a percentage of sales, ad spends are just around 11.5% as against 13.7% same time last year. And that supported the EBITDA because gross margins year-on-year have declined by about 300 basis points as well. The company says that the current quarter has seen some improved momentum, but they remain cautiously optimistic going ahead. For Colgate, the bigger trend, however, will be over the next few quarters how the new MD, Prabhas Narasimhan, who was hired from HUL, performs. So that is something we'll be watching out for.
Thank you very much for Asian Paints and Colgate. Let's talk about Havells. That fell 2% after it failed to deliver in the second quarter. Varishta is here with the key highlights from the management conference call.
Well, Havells India has witnessed a soft quarter in Q2 of FY23, and the weak point has definitely been on the margin front. The margin estimates were at 10.9%, which is anyways lower than 13.8%, which was clocked in the same quarter of last year. The actual margins have come in at 7.8%, which is of course lower even than the estimates. The company says that the margins were impacted owing to full absorption of high-cost inventory, which is against falling raw material prices. But the silver lining, though, is that the margins are expected to witness an uptick Q3 of FY23 onwards. Also, the company has explicitly mentioned that the consumer demand currently is sluggish. Electrical consumer durables revenues are expected to be impacted due to short-term destocking in fans, which is led by changes in energy efficiency norms, and expect to normalize it from Q3 of FY23 onwards. Also, Lloyd's contribution has turned negative, with EBIT margins falling as low as 20% in this quarter. Some of the con call takeaways for the company were that the management has acknowledged of a high competitive intensity and them being unsuccessful in being able to pass on the full raw material price rise to the consumers, though the price hikes, another round will take place in Q4 of FY23, and they are confident that these price hikes will be fully absorbed by the market. So we could expect normalized margins in Q4 of FY23. Also, the company will continue investments in advertising and building their brands, which is also for the Lloyd brand. The inventory buildup is also increasing for the ongoing festival season. This is amidst a sluggish consumer demand which is ongoing. The market share in the cables and wires business is currently at 15%, while for ACs is at 12 to 13%. And in the first half of the ongoing financial year, the company had incurred approximately 165 crores of capex and expects 700 crores as the target for the full year. Now, even with a high cash balance that the company is sitting on, they are not looking at any inorganic growth, at least in the near future, but they have plans to increase their rural penetration, which at present is at approximately 5%.
Last year, we had seen unprecedented increase in the raw material prices, of which not all the entire price cost increase was passed on to the market. It was more high cost inventory at lower prices, sale prices. We knew that this will happen in the second quarter. So we do believe that this is a trough for this quarter, because most of the old high-priced inventory is now out of the system, especially for the cables and wire business, where we saw drop in margins. In all the businesses that you mentioned, all the four businesses, the major reduction has been in the cables and wires business for the reasons I mentioned. So it should be coming back to normal levels, which is in case of cables is usually around 9 to 10%. In the entire ECD segment, Havells has seen very good growth in the last 2 or 3 years. This destocking will continue in the third quarter a bit. So there could be some pressure on the revenue growth in ECD.
That's Havels for you. Our fifth headline for the day is on Vodafone Idea, and there could be some relief for Vodafone Idea. Reuters is reporting that SEBI has approved the government plan to convert the dues of Vodafone Idea into equity. Remember, this pertains to the conversion of about 16,000 crore on interest on the AGR dues, which the government said that instead of paying us, the interest on the AGR dues, that debt will be converted into equity. Now, the reason why the government perhaps was seeking the SEBI permission or approval, because the government planned to convert that debt into equity at a price of 11 rupees 80 paise, which is higher than where the stock is currently quoting at, which is sub 10 rupees and below face value. That's the reason why a SEBI approval was pending. Now, this comes as a relief because this conversion of this government dues into AGR dues into equity has been pending since January of 2022. That's close to about 10 months now. And only once there was clarity that, the government is going to convert its stakes, will external funding for Vodafone Idea be possible. Remember, Vodafone Idea was looking to raise about 10,000 crore of equity and plus an additional 10,000 crore of debt from banks to fund its 5G plans. But it was unable to raise that external funding because we did not have clarity on when the government will be converting its equity into, if and when the government will be converting its, that AGR dues into equity. Once it happens, so this development, the SEBI approval, paves the way for the government to go ahead and convert its interest on AGR dues, which is approximately worth 16,000 crore, into equity. Once it happens, the government will have about a 33% stake in Vodafone Idea, and the debt on Vodafone Idea's books will come down by 16,000 crore rupees. So this is a seminal step, and it paves the way forward for this long pending conversion. So that's about Vodafone Idea. Let's talk about Syngene, the research subsidiary of pharma giant Biocon. It reported a better than expected set of earnings for the second quarter. The numbers came out yesterday. The stock was higher in yesterday's trade. In terms of the numbers, the profits went up 53% year on year. We caught up with the MD and CEO, Jonathan Hunt, earlier today, who said that they expect Zoetis deal contribution to begin next year. He also added that the USD dollar strength aided the company's numbers.
So the qualification steps are really getting ready for that manufacturing, having all your plant qualified, getting the regulators both from the European Union and also from the US to come in. That should be happening in the second half of this year. The timeline is difficult to predict. It's as long as it takes the regulators to conclude their inspections and give us the feedback report. If you assume that those are successful, then we're into manufacturing as soon as the fourth quarter of this financial year, and that really then starts to ship and become a revenue driver from the very beginning of the next financial year.
That's Syngene for you. And let's talk about Max Financial. There was a conference call held today in the morning, and in that, Axis Bank is reaffirmed to being the promoter and the distribution partner for Max Life Insurance. They also said that the valuation process was completed legally as per the permitted valuation techniques. Yash is here to tell us more. Yash?
Well, to explain this, I just have to say that yesterday we did an exclusive story where we spoke about how the insurance regulator has raised red flags with respect to the transaction between Axis Bank and Max Life. A 7% acquisition is still remaining as a part of that transaction, and the regulator there wanted that 7% to be acquired at fair market value and uniform price per share, which according to the regulator wasn't done in the first part of the transaction. We asked this question to the management of Max Life Insurance, Max Financial Services in the conference call today, and what they said was that as of now they had no communication from the insurance regulator on valuation at this point of time. They personally don't believe that there was any wrongdoing with the Axis Bank Max Life transaction. The valuation for this transaction, according to them, was done as per legal valuation techniques. As far as that 7% which is in question is concerned, the management said that they'll have to see what the regulator has to say in terms of its comments when they go for an application to transfer the 7% to Axis Bank. Also, that application may be made in the current financial year itself. There was an important statement which the management gave, which is they said that they are committed to moving ahead with the Axis Bank Max Life deal with a methodology which was followed earlier. What if the earlier methodology is not accepted by the regulator? In that case, what happens to the transaction itself? That's an important question to monitor going forward.
Thank you, Yash, for explaining that story to us. With that, we're out of time on this edition of Markets Today. Thank you for watching.